Good morning, I'm Giuseppe Basile, I'm the analyst and trader. You can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the @FibStalker nickname. Good morning, today is Wednesday, December the 19th, 2012, and it's 1:30 p.m. Italian time. I want to remind you that Italian time zone is GMT +1. This video is a review of the euro versus the British pound forex pair. EUR versus GBP, that's the ticker, and I do this weekly review. I do these forex reviews, and I like to review the chart on the daily chart, but also on the weekly chart to see where we are in the bigger time frame, because I believe bigger time frames are much more important because they really set the price and direction. Now I'm going to post this video in my forex page on the blog, so you'll see it there. Let's start with the analysis. I'm going to start from the weekly chart to get a bird eye view on this pair, and as you can see, this pair obviously comes price is actually available back from, I have it on TradeStation back from 2000, basically 2000. And as you can see, if we quickly review the chart, we can actually see that this pair behaved really. The chart is really very similar to other charts we analyze frequently in forex, and all of them, especially those trading against the dollar, have this huge bull flag, are showing this huge bull flag, and the euro versus the pound is not different. So it means that the pound here is acting very like the dollar. So it means that the market at the moment trusts the euro more than the pound, and we can see that there is this support level that has been tested in mid 2012 at the 0.764050 area, and that's a support level. The fact that price bounced off this support level, it's meaningful, it's very important, and I'll show you that the sequence of measured moves we had actually was interrupted as price reacted out of this support level. But first of all, I want to give a look to the wider time frame and show you this level of resistance at 89.30 area here that provides support to this resistance to price. But as you can see, price were never the bears were never able to bring price to the target in 0.7660 here. So that's an additional proof that bulls are in control on the weekly chart of this forex pair. So let's review what happened here in the last few months. I would say since basically since the mid of 2011. So we had this first measured move lower. We hit the first target in 83.90, and then we continued lower. We had a next measured move, and I trace it from the 50 level of this previous sequence, and program trading has been using that as well. But as you can see, selling came before the level here. So I'm going to retrace this again, and as you can see, the next resistance came at 0.85, and then first target in 0.80 was it, and then the second target was it. Then price came to this support level, and it happened that the next extension short failed, and we can see this from price climbing above the 080 40 level. Now the bulls are in control in this market at the moment, but we on the weekly we can also identify resistance level at 084, which I would keep in mind going forward. So moving to the daily, what we can see that in the last leg higher that started in July, and it started with at the same time it started on other pair involving the euro. But differently from, for example, the euro dollar that I follow daily, this pair went to trade the old way halfway back. That's what we were expecting from the euro dollar. It never happened, and I believe because of the interference of the moving averages. There were no moving averages here on the way, and the 79.60 area traded basically to the pip here. And what happened? Price kept moving higher, and it has a 08260 level of target, and this target is very similar to the 134.30 level we have in the euro dollar. So I believe that when the euro dollar will hit that target, it's possible that the euro GBP will also hit this 08260 target. So that's where we are headed at the moment. And if we analyze the daily chart on a smaller scale, we can also recognize a similar draw that we have in the euro dollar as well. And that draw was observed on the euro dollar to the pip, while price, as we can see, dipped below the 50% level at 80.60, 80.53, but it respected the 80.30 stop level. So as we can see, this setup is helping price into the 081.90 target level, and as you can see, it has a second target corresponding to the previous 08260 level we are watching. So I would not expect significant retracements in this market here, and if you have a position from 080 or even 079, I would bring it up to 082 and maybe even higher. So let's see where we have this resistance level, and that could be an area where we get partial profits out of this market, and this would be this would be the 84.10 level. And as you can see, and that's not a case, this 84.20 level, target level, and the previous resistance lines up with the second target of this this daily setup we have here at 080. So that's not a case. Program trading is going to push price towards that level, and that's the level where we want to take profit off the table on your position trade or swing trade if you have one. So I hope this information is useful. You can profit from this information, and I publish my newsletter, and every week in the newsletter I also include a video called Fibstalker View on Currencies, in which I analyze the dollar index and a number of forex pairs. If you are interested in forex and you trade forex, you might want to subscribe to my newsletter and get this information for free every week. You can also review the previous videos on my forex page on the blog. So feel free to send me questions and requests for clarification if you need them. Thank you very much for your attention. I wish you a very good trading day. Thanks for your patience, and bye bye. Thank you.